Hi everyone, welcome to Unit Masters, week 5 of our 6 weeks Masters program. And this week we speak about stakeholder capitalism and how we can actually shift from a world where just very few people own a lot to a world where many people own also a lot. And how can we actually bring from a form that is a shareholder capitalism, move to a place where a stakeholder capitalism can be facilitated, where individual contributors or many different contributors can build the economy together. And one essential part of what we call stakeholder capitalism is also a way to look into sustainability, into how to align our actions with environmental, social governance causes. And with us today, we have an expert in this field. It's Fleur. Fleur is CEO and founder of Proof of Impact, which builds on blockchain technology. And Fleur, you will share with us exactly what you do. It basically helps to bring more transparency into the market so that in a global scale, action can be informed better and aligned better so that we move overall as a world society into a more fair, equitable world. Fleur is a serial entrepreneur. She has worked on different entrepreneurial ventures, and she has very, very deep expertise in the finance industry. So it's just like, and just like a super good combination, solid background with a very big heart and vision in front of her. Welcome, Fleur. Stage is all yours.
Thank you very much, Yip, and thank you for all of you guys tuning in and willing to be recipients of what I'm about to share. So maybe just a little bit more background on myself. I currently live in South Africa, so I'm in Cape Town, which used to be a disadvantage, but since COVID, and the whole world has become digital, it's still a disadvantage because now you get roped into every single conference call around the world, regardless of the time. But we used to have to jump in airplanes, and that's obviously reduced a bit, which is good for everybody. I started my career on what we now refer to as the dark side, so the investment banking side. I actually before that I studied biochemistry, and the essay I wrote to my university in the UK in 1992 was about vaccines for coronaviruses. On the basis of that essay, they actually allowed me to come in as a foreign student. But the coronavirus at the time that we were looking into was HIV. And I had come to the conclusion, just as a little bit of a fun detail, that it was absolutely pointless vaccinating against that virus because its mutations were so fast. And at that time, no one really cared if Africans and homosexuals had this disease and wanted to spend billions of dollars on it. So, that was kind of my sort of initial wake up to the grown-up world. As I said, I then got recruited to join an investment bank. Within a couple of years of being in London, I then was really attracted to emerging markets. I have no idea why, but South Africa in 1998, 99 seemed particularly attractive, with Nelson Mandela's Long Walk to Freedom just having been published and the democratization here. I asked if I could move here, and because I'm originally Dutch, they said absolutely, Afrikaans and Dutch for a foreigner are all the same thing anyway. And then again, after a couple of months, I just got bored and was introduced to another ex-banker. He was more of a trader. I was more on the investment side. And he had this idea of using this medium, the internet, which was all new at the time, to build a trading platform, a financial trading platform to allow emerging market retail investors, so the man on the street, eventually to have access to global markets. So the NASDAQ, the Dow Jones, FTSE, etc. Because believe it or not, in those days, it was a telephone service, it was extremely expensive, and it was inaccessible. So we built a business called Global Trader. And 20 years later, under the brand Easy Equities, it's now the Robinhood of Africa, right? So it has over 1 million active users, and really has lived up to its promise of getting, the man on the street in Africa sort of fractional ownership to global assets. And the point of the story was really the use of a new medium, right? The internet, to democratize and give access to people who otherwise would not. And the second message from that story is it takes a hell of a long time, right? So we're now in 2021, that was in 2000. So really, it took 18 to 20 years to really make the claim come true that this facility, that this business was living up to its promise. Now, obviously, the rate of change and the pace of change is far faster now. But yeah, I just thought that was a good sort of sample anecdote for what's coming next. So since 2007, 2008, I have been really focused on what's now known as impact investing. And the impact investing world, as we see it, has kind of two components to it. But what we call the direction of travel is clear. So traditionally, capital markets are defined under, what type of securities you're trading. So is it public equities, is it private equities, or private assets for that matter? And then within the theme, so within the sustainability theme, it's around, are you trying to avoid risks? So are you making sure that you're not doing any harm, which is what we call the left-hand side of the spectrum, which is commonly referred to as like ESG investing, so environmental, social, and governance investing, which is very policy related. And impact investing is on the right-hand side of the spectrum, which is really about driving financial sustainable value through making a contribution. So on the right-hand side, you're looking at businesses and assets that have the intent to make a measurable positive contribution to the environment and society. And that is now defined as impact investing. And of the 300 odd trillion dollars of assets we have around the world, roughly $1 trillion falls in this super right category. So it's minuscule, right? In terms of really intentional impact investing. When you go further to the left, and I've got like here in this graph, a bit of a transition category, and the left-hand side is the ESG category, we could possibly argue that over $100 trillion, and this is growing by the day, is definitely falling into the far left, right? So this bucket of investors realizing they can just not do any harm. They cannot emit carbon. And as of the end of this week or early next week, we've got COP26, where there'll be even more pledges and promises and penalties for those who do emit carbon. The middle group is probably, I would say a $3 to $10 trillion asset class, where we're going from brown to green. So we're looking at companies that are transforming from fossil fuels to renewable energy. You're talking about companies who've had very sort of monocultural type environments, very white male dominated, who are now looking at this new concept of DEI, which is diversity, equality, and inclusion. And then again, as I mentioned, this $1 trillion on the right-hand side. But what is unmistakably the case, which has never been really the situation before, is that this movement from the left to the right is happening, right? So as historically, we only invested on the basis of what financial return am I getting, asset owners, which are the people who own the $300 trillion of money, these are not the asset allocators, but the actual owners of wealth and of the assets, which are companies, sovereign wealth, family offices, etc. They are now saying, and they are now demanding, that all those people in the chain that are managing their money start looking at, what is my money solving for? How does my money matter? How is it contributing? So what's the biggest gap that we have in our financial system is the data on the third part of the new paradigm, risk, return, impact, right? So the risk return, we've kind of analyzed to death. I mean, there's trillions of dollars of companies, from Reuters to Bloomberg to Refinitiv to God knows what else, that sort of massage, collect, and obtain this data, often in a very poor way, by the way. I mean, the discrepancy between the data providers is, really quite shocking. And they're very much focused around public equities, which again is only a fraction of our total investment world. But when it comes to actually getting data from underlying companies and assets on how they are performing in terms of all of these criteria that we've got here on this chart, right? So are they hiring more women? Are they attracting next generation talent because they're aligning really their mission with their action? Do they have a brand reputation that is in line, again, with their action? If you call yourself sustainable, are you truly making sure that you're sourcing raw materials from sustainable suppliers themselves? And then can we really get to some form of an understanding around not only what is the return that this company or asset is providing in terms of financial terms, but how did it create that return? And is that a sustainable way to create that return? And then our belief, and as Diep just mentioned, now that we've just started proof of impact, but we have a few other funds like Osmosis Investment as well, is that those companies, those assets who will be able to make legitimate claims and therefore provide data evidence, not some sort of a guy with a clipboard who comes and sees your company once a year and says, oh, this all looks green and sustainable. No. Data evidence that's electronically derived to show that you truly are making sure that you're not doing any harm, truly transitioning, and in the best case, actually contributing to the environment society. We believe that those companies, and we have evidence of it, will actually, on a like for like, at an absolute basis, outperform, right, financially. So any company that is not thinking about this spectrum, this graph right now, will not be in business in the next 10 years. I mean, that's basically our hypothesis. So the question then is, but how, right? How are we going to do this, and what kind of infrastructure exists? So when we started with Proof of Impact 3 years ago, there was nowhere to go to get verified information on whether a company or real estate building or a country, no matter what the asset is truly doing, what they say they're doing. So it's truly making sure that they're measuring their water usage, their carbon emissions, and those are the easy ones, right? Because we've obviously been a little bit woken up by the whole climate change threat, and particularly again at the large public enterprise side, there's all sorts of risk policies in place to make sure the companies measure it. But when you go further down into the economy, where the real engine of the economy sits in what we call the small to medium enterprises, the private companies, the private assets, that information isn't really visible. And if you want to get it, it's really hard to dig in, and it's really expensive. And then how do you analyze it? So we really felt the need for a foundational piece of infrastructure that needed to be built in order to, at the first instance, just scrape. And it's a horrible word, and no engineer likes the word scraping because it's menial and it's sort of, not the type of sexy work that, particular blockchain engineers want to work on. But the same thing applies with any other infrastructure. Garbage in is garbage out, right? So we have to scrape data from source, so where the activities are happening, to have the highest probability, the highest confidence level that we have accurate information to begin with. The second thing is we need data from lots of sources to corroborate that a particular claim is indeed true or false, right? So when we're looking at a company who's saying, oh, I get 100% of my energy requirements from sustainable, renewable energy sources, that can't just be the company's self-reported management statement on their B Corp certificate, which no one checks, by the way, to say, oh, we are 100% renewable. Like, that is not good enough, right? We have to find objective sources of information. So where will you find those objective sources of information is the question that we at Proof of Impact have asked ourselves. And in the next slide, you'll see how we have started to integrate multiple sources of information into our platform so that we can really support the companies and investors with making legitimate data-based claims that they are sourcing energy from renewable energy sources, that they are hiring women, that their increase in wages even leads to better well-being of their employees. All that data is now possible to collect in a timely and accurate way. So that's kind of the premise. So what does that mean then for the ecosystem? So Yip, from the beginning in the introduction, she was talking about the various stakeholders now, right? And this whole transition economy where we go from, oh, let's just make sure we don't do any harm, but still maximize for financial returns, is changing in the sense that we are saying it's not just about the financial returns for the shareholders that we need to care about. We have other stakeholders in our ecosystem that need to be served. And this is why you've got this backdrop of nature, right? So the waterways, the plants, etc. That is a stakeholder that every business will have to take into consideration if it wants to thrive in the future. And then what are the other categories? Well, obviously you have the company, right? And the company can be in various ecosystems itself, various verticals, right? So if you're in CPG, which is consumer packaging goods, it's not just about you and how you are making your product. It's also where are you supplying from, right? Or where are you supplying to? So where are you sourcing from? Where are you supplying to? Can you really create like this chain of consistency across your products and your vertical to make sure that when you do something, you have an activity and you produce something, it has an amplified effect downwards in terms of the customers that you're buying from, that they are aware of what is coming to them, but also that you go upstream and say, hey, if you can't really show me where that wood came from, or you can't show me your energy footprint, I'm sorry, but I just can't buy from you anymore. This is how we start creating systems change, right? So that's at the company level. And we really believe that it's at the company level where change will be driven from. Now, why will a company be somewhat forced or at least attracted to look at this data that they've never really been measuring before? It's the same thing as like you say, okay, why are you suddenly going to watch your weight, right? It's either because maybe you just want to feel healthy, you want to have a longer life, or I don't know, you might want to attract another partner. So there has to be a motivation, right, for you to change your behavior, that you are going to start measuring what you value. Now, the change in behavior comes from two driving sources, and actually a third, but I don't like regulators very much, so I'm ignoring them, but that would be the third source. But the two primary sources of this behavioral change drive are the asset owners that I mentioned earlier. So the people with the money who are going to say, if you cannot show to me as a company that you are continuing your activities in a sustainable way, I just can't invest in you, because the pension fund that invests in me or the family office that is giving me money is asking me now to report on what my portfolio is solving for, and I need that data. So if you can't give it to me, I can't invest in you. So this conditional type of funding that is happening all across the spectrum, from what we call development finance institutions, which are deep intentional investors, to the mainstream private equity and venture capital and now pension funds, they are now putting this demand onto the companies. But from the bottom up, from the market perspective, like Stanford University has said, they have never seen such a dramatic change in consumer behavior, since that photograph of the turtle with the straw up the nose, right? So one image made sure that the entire world, from the children upwards, said, hey, mama, hey, papa, I don't want a drink with a straw in it anymore because the turtle's going to die, right? So this kind of imagery, this kind of media influence has really changed the way that particularly the Western market, right, the Northern Hemisphere is consuming. And I'm living in Africa, and I can say also that it's filtering through to the middle classes in Africa as well. I wouldn't go as far as saying that the people who are really struggling for survival are checking whether or not, the cup is made out of plastic or not, but it's definitely already going into far broader categories of the population who all aspire to do well, right, and to do good. So this is a massive change that companies are again responding to. So what this all boils down to is that, again, what we come back to this confirmation, this evidence that you are conducting sustainable activities as a company, as an investor, as a consumer. That data, that lake of information needs to be collected somewhere, and it needs to be actionable. So this is coming to the crux of it. Like, as we used the internet 20 years ago to purely give access in a digital, cost-effective way to products and services that were previously inaccessible for the masses, we now have the next iteration of a technology which not only makes it accessible, it securitizes it. It creates value out of the data. And that is something that is incredibly important when you add this third element of the paradigm. So risk return, we can do in our current financial system. But when you add what is deemed to be more subjective, qualitative information to this paradigm, which is this impact data, which was historically very expensive to get, then the ability to create a data bundle that as a package that has financial information, risk information, and the impact information, to be able to securitize that and say, this is actually the bundle of data with which a company will go to the capital markets with, either to borrow money, and therefore their cost of capital is going to be affected by that data bundle. The more sustainable you are, the lower risk you are, therefore the lower your cost of capital should be, which means you should grow faster. And that will be then a data bundle with a smart contract that becomes a tokenized loan. But similarly, there will be other forms of securities, right? So there'll be a convergence of public and private markets, because now that this private market data has become digitized and could become securitized, there's no reason that you have to have distinctions between companies that are listed on stock exchanges versus those who are not. every company will have its own digital currency. And if it uses this as a utility to communicate with its customers in the form of loyalty schemes, reward schemes, whatever, or if it uses it to go and access the capital markets, it will then effectively all become public securities in some shape or form or another. So that's kind of our third hypothesis, right? So our first hypothesis is that every single company has data that can be transformed into the second hypothesis, which is value, right? And this value is going to be in line with the more impact, the greater the financial value. And therefore, we believe that every single asset in the future, every single security in the future will have an embedded impact content to it, right? So that's effectively where we're going to be resolving into. So coming back to the ground, so there's three products that we're building in this ecosystem. One is Proof of Impact, which is a data insights platform, which I'll show you in a second. So gathering the data from the ground up, making sure that we have multiple sources of information to verify that data. And then we do write the data to the blockchain for two reasons. One is that future vision of this data can become securitizable, but actually from a far more mundane perspective, we want to protect the integrity of the data so that every person in the capital stack, from the company management team to the private equity firm that's investing in them, to the LP, the limited partnership that invests into the private equity firm, to the pension fund that invests in the private equity firm that then invests in the company, that they can all go and source from the same data pool and slice and dice it according to their needs, rather than each of them having to send again a guy with a clipboard in and collect fresh information, right? So that's kind of the idea for protecting the integrity of the data in this particular way. So that's a Proof of Impact foundational infrastructure. Once we have clean, actionable data, we're building two other infrastructures. One is called the Impact Linked Finance Engine, and this is for deeper intentional investors. So this is for these development finance institutions that I mentioned before, who spend tens of billions of dollars per year into emerging markets to invest in sustainable infrastructure. And they, by mandate, have to show that their money is having an impact. They're quite commercial in their return requirements, but they do have to basically show that there is a linkage between what they funded and where the impact sits. So creating a digital engine around that, where the data comes from the ground up and then is immediately again connected through smart contracts to the terms that the funder has said, and then gets settled digitally. That's our dream scenario for the ILF engine, right? So the Impact Linked Finance Engine. The second application that can be built out of the Proof of Impact data platform is purpose.io. So when we looked at that impact investing silo that I mentioned in the beginning of $1 trillion going to measurable, positive investments, it's very, very limited in terms of the number and the types of investors who can participate in that. In fact, it's only 250 investors who make up the 1 trillion, and they're predominantly the same usual suspects: accredited high net worth investors, family offices, and some dedicated institutional investors. It is not a man on the street. But why wouldn't any 20-year-old, right, who now has a Revolut account, who's got his crypto account, why would they not be able to participate in funding activities and businesses that are doing good and doing well and build up their own portfolio of sustainable assets, right? Or even people who have maybe $500 to $5,000 that they want to put to work rather than sitting on the bank and having to pay for it because they're going to negative interest rate charges. So there's a new platform that is being developed called purpose.io, which is really looking at democratizing, right? So giving access of impact investment opportunities to the mainstream. But the flip side of that is also that companies that do good, that really actually struggle to become visible to, again, the elite group of Silicon Valley VCs, right, who are not going to travel further than 10K from their doorstep, right, that they become also visible to another market that can just constantly funnel money into their working capital needs, right? So that the time to get off the ground, set something up that is going to work is not going to be as long, that you don't have to stand in a grant queue for 3 years. You don't have to wait until you got to your 1.5 million ARR to go and raise money from someone reputable, blah, blah, blah. That while you prove with your data that you are doing the right thing, you are creating financial prosperity, you are supporting the environment, and you're doing this in a socially responsible way, there's no reason why you should not only attract capital, but that you should grow really fast. So that's kind of the objective of all these pieces of infrastructure. I'm just conscious of time, Yip. So do you want me to dive a bit deeper around how it actually works from a proof of impact perspective, or shall I already open up for questions?
Oh no, let's hear your sharing about how it works.
Okay, so I'll be short. But basically, as I mentioned, the blockchain, as you all know, right, but most people don't seem to understand, is not some miraculous piece of equipment that cleans up all your shit, right? It doesn't do that. So you still need to make sure that you have clean data going into the blockchain. So what is clean data? Well, clean data is data that, as I mentioned earlier, hopefully and ideally does not have any sort of human intervention associated with it. So it comes directly from IoT devices, operating systems. Still, it doesn't guarantee that it can't be gamed or manipulated, but it's a hell of a lot better than what we have right now for environmental social data, which is predominantly just self-reported, human-reported information. So the first source, which is still very conventional, that we use a proof of impact, and we have 220 different operating systems that we now automatically integrate with through APIs, is called profit data. So this sits in your CRM, your ERP, et cetera. And this is, again, like you saying, okay, I have making a claim that my company is entirely reliant on renewable energy. Okay, well, let's connect into your ERP system and see how much are you paying for your energy bills? Who are you paying? Are those legitimate renewable energy suppliers? I mean, if you're paying British Gas, it's not, right? In the US, they've now sort of segregated out the utility bills where you can see, depending on your energy provider, how much of their energy comes from a sustainable source versus not, right? But in most cases, if you have evidence in your cash flow statement that you are paying for a traditional energy company to provide you with energy requirements, it means that you are not actually using renewable energy sources. So that would be one thing, right? So that's very basic, and that can be checked really well. The other thing would be to add additional sources of data. So this is what we call planet data. So you're IKEA or you're Walmart, and you've made the claim that you're 100% reliable in your retail stores on renewable energy, and it's coming from the solar panels on the roof. Great. Every solar panel now has chip cards in it. We can see if it's active. We can see how much kilowatts it produced. We can also set that off against the weather maps, right? So if you're in Scotland and you're claiming in the middle of January that you have, I don't know, X amount of kilowattage that you're producing from your solar roof, and the sun hasn't appeared for 6 weeks, or the UV is so low that it's just unlikely, then again, there's this is not happening. This claim cannot be true, right? So this is the planet data that we can connect from different objective sources. And the third source of data, which has been grossly neglected because it was always so expensive and so people thought subjective to get, is the people data. And this is particularly relevant when we're talking about fair wages, child labor, etc. And the people data comes from mainly surveys to this device, right? So sending out bulk, WhatsApp, Clipfolio, different types of surveys that go to a variety of employees, users, etc., in the actual company or that are using company services. And it does two things. It can either, again, support the company's claim, we pay above minimum wages, we have really high satisfaction rates with our employees, our customers love our product. Yes, it's all confirmed by the surveys en masse. Or it could also be a risk alert system where, I don't know, there's a woman, she's got her phone, she's sitting in a manufacturing floor in Bangladesh, she's taking photographs of the happiness of the employees, and you see that there's 3 kids sitting on the floor needling away, right? So that obviously shows that there's, possibly child labor on site. So these are the different sources of information that can then be collected. They then go into a data lake, they then get checked. Right, so we run a protocol where we check for anomalies, for corroboration or conflicts between the different data sources. And when we feel that there's a high enough confidence level that the data seems to be correct to substantiate an impact claim, then we can actually transcribe this data onto a blockchain. And then obviously, from there onwards, its integrity will be protected. So this also for companies could be really helpful to, for instance, fight, future claims, right? So if someone says, oh, by the way, in 2021, you said that you were 100% green. That's not true because, we know that you had a diesel generator in the back. We can go back to the blockchain, and from that date, you could show that you had X amount of energy usage. These were the solar panels or the wind turbines or the hydro facilities that you were connected into. They produce X, Y, Z amount of energy. So that claim that someone says you did not do what you said you were going to do can then be, fought off quite legitimately. Once the information is clean and verified, then the fun stuff starts, right? This is when we can do the analysis. So in the world, we look at a lot of different framework standards. So Sustainable Development Goals is now widely adopted by 57% of the investors, according to even Goldman Sachs, who's, as we know, not the most impactful or sustainable institution. But there's the Impact Management Project, there is IRIS, there's the World Bank. I mean, there's specific industry ones, and our system just maps all of those automatically. So it takes away the headache for our clients to having to go and look at what standard and framework do I need to report into. And then you ask, right? So I, as an investor, you can say, I'm going to make my investments contingent on a company's impact performance. And if I'm an advanced investor, I would say I will just buy, my securities in digital form. And we are working with UBS on a digital platform for their high net worth. Sorry, they only deal high net worth. They can't go below that. Clients to buy, the digital investments for some of those companies where we would collect the information through the APIs so that the high net worth investor can, have a smart loan to show that they are investing in companies that are truly sustainable and view that profile every day. But also for management teams, right? To be able to really improve your performance based on real-time data rather than a once-a-year PDF is instrumental to your long-term performance. So that's another big use case. The consumer use case, where, for instance, if we would verify the company's sustainable supply chain, say again, like IKEA, and we say, no, we've actually onboarded their 1,800, which we have not, sustainable suppliers, and every product has a little QR code where you zap it and you go straight to the footprint of that particular supplier to show that at the E, the S, and the G level, they've been compliant and this is the data. That would kind of be the next iteration of that, but we haven't gone that far yet. I mean, that's going to be a couple of years in the making. So what does this look like again? So this is just an example of an actual asset manager in Switzerland who invests in renewable energy projects and assets. So again, it's just reiterating this from the ground up. So the data comes from the asset to all these different devices and systems. We are then able to map this to the SDGs. This data can then be tokenized, right? If so required. I mean, I have to admit that at the moment, I have to say that most investors are not yet comfortable at all yet with buying assets in digital form, but hopefully we obviously think this is going to change. But even just laying the foundations that this would be possible and that we can have a secure data layer across the capital stack, I think is something that over the next 18, 24 months will become far more standard. So that was a lot that I threw at you guys. So if you have any questions, also feel free to email me, right? So I'm Fleur, F-L-E-U-R, @proofofimpact.com. And yeah, I mean, in addition to, answering your questions, we're also growing rapidly. So I said to Yip already, anyone who feels attracted to the story and wants to join our team, we need a lot of people.
Yeah. Great. That's very good news. What kind of roles are you filling, Fleur?
So it's predominantly on the engineering and on the marketing side, because that's where we have to really build up our infrastructure. So on the engineering, at the moment, our focus is we have quite a good blockchain team already because they come from the ethos.io. They built the digital wallet there. And that got bought by Voyager. But where we're really needing to ramp up quickly, particularly if we want to be the palantir for good data, is on the data management side. So AI, machine learning, the usual suspects. And then on the marketing side, it's really around digital marketing experience, building those funnels, automated rails, et cetera, but also, gaining better insights as to, that next generation of company that within their DNA are just going to want to report on this, not because the regulator says it, not because their investor insists on it, because they believe it's going to drive their value, right? How do we get to them? How do we communicate to them? And how do we package our offering in a way where they know this is not just a nice to have, this is an essential part of their existence.
Thanks a lot for sharing. So we have quite a number of questions. We'll start with easier ones first, and then we go maybe into more technical ones. So the first one is about your client base. Which company actually already provides Impact as a service software and services, and who would be your typical clients?
Yeah. So again, like if we can share our sort of materials, so both the demo and the product, but there's two categories of clients. One is the investor, so that would be a private equity or venture capital firm who has some theme which is related to impact or sustainability. So think energy transition, think green crypto mining. We just onboarded Casper, and we're in quite conversations with one of the number 3, number 4 largest chains in the world. About making sure that we can verify that they are increasing the resource efficiency of their chain, but also in the investments that they make. The other big category is sustainable real estate, and that is also leads quite nice into the securitization, because we think that tokenized real estate assets with, again, the impacted green or impact data is definitely a very big growth area. So that's on the investor side. And then what happens is I typically say for a pilot, because we only went live at the beginning of this year, right? So we only have, I think, we have 60 companies that we are now live accounting for, and that we're measuring the ESG and impact performance of. So the flip side is obviously these investors have their portfolio companies. So the investor would see the portfolio view and the companies would see their own individual views. But then we also independently have companies, as I mentioned earlier, that want to position themselves for fundraising, or that really want to make sure that their brand is aligned with the story that they tell and that the actions that they conduct. So therefore, the companies will come to us. And there again, like I would say on the smaller side, so I'd say companies between $20 to $200 million in revenue. Although we are now talking to a couple of the sort of, Forbes top 50 companies in the world who are thinking of using this platform as well.
Now, there's a question from Marco, who's, from what I understand, pointing towards the centralization and decentralization perspective. So he says proof of impact is the one who verifies the data, if correct. So basically, market participants need to trust that proof of impact does the certification and does the right way of data normalization. As a follow-up to that also, how would that process of normalization be monetized? Who actually pays for these services? And I guess on the bigger scheme also, how do we make sure that there's still a process of decentralization in the process?
Now, these are excellent questions. So let's do the easy part first. So the way that we monetize our entire solution, which is the collection of the data, the verification, so the analysis that we do on it, and then the further sort of mapping to existing frameworks and potentially even further analysis, like which impact outputs could lead to a financial outcome or an impact outcome. We charge in the form of a software as a service subscription. So they just charge, we charge our clients like a monthly fee. So that's one thing. The decentralized versus centralized, like I 100% agree with Marco that at the moment, our customers need to trust in us as a third party verifier, a centralized organization, to provide the assurance. We can't insure and we can't guarantee, but we can assure that from the data sources that we've collected, we think that there's a high confidence level that they're meeting the impact claims. And this is already a huge step from where the market is right now, where either they're self-reporting or they're hiring a consultant, right? In an analog manual form. So we're already asking customers to engage digitally, to allow us to access multiple data sources, et cetera. But Marco, where we ultimately see this go is a network, right? And that's originally what our first white paper was all about, where we just imagined that any impact creator would just upload their data. But anyone in their ecosystem, whether that was a stakeholder like a customer or an employee, would do the same, right? So everybody would just have access to the network and almost as stakers themselves provide information. It's just the market's not advanced enough for that yet. So, I mean, I don't know if that's 2 years or 5 years, but right now, in order to move the needle to at least get to some higher level of verification from where we were, we've put the centralized infrastructure in place. But like, if you look at the stuff that we're building on top, like Purpose.io, again, Purpose.io will launch with proof of impact as a gateway. But as the network grows, then ideally it should be a DAO, right? So Purpose.io should be a anonymous, autonomous organization where anybody can just dump information that they think is of value to the assessment of the network on whether or not an impact creator should receive funding or not. But I think with outside of this room and maybe another couple of thousand of people, it's just a little bit too far of a stretch to go there right now.
Yeah, I just came back from Lisbon, and autonomous organizations, and really, really impressive discussions already happening with a lot of capital base. So I think the future might be nearer than what all of us think, hopefully, fingers crossed. There's more questions about regulation and their impact on this. Which regulatory bodies, asked Christian, have the greatest impact on enterprises to implement impact as a service?
Yeah. So, I mean, coming back to Marco's thing, like the biggest question we get from our clients is around data protection, right? And can we comply with, GDPR? And I guess after all the Facebook and WhatsApp, scrutiny, people are rightfully concerned about, okay, I'm supplying you with access to all this information. How does it get protected? How does it get secured? And again, hopefully in the future, in a decentralized model, that will be solved for, and the provider of the data to the network remains the owner of it, but we're just not there yet. So I would say the first thing is really the data protection laws and regulators are becoming very, very demanding, right, for companies and suppliers of services to companies. So that's one thing. In terms of financial regulation, there's been a big movement in Europe, in particularly around what's called the European Green Deal, which has a taxonomy called the Sustainable Finance Disclosure Requirement, SFDR. And SFDR says that any company, or any investor rather, that says that they are green or sustainable not only needs to provide the policy, which is what it used to be, just show us that you've got a document. And then they even proved that the companies with most of the policies were the least positive towards the environment. So more policies, less performance really from an environmental perspective. So they realized, oh, you can't just have the policy, but the SFDR now requires that you take snapshots of the data. So June 2021, you need to show the data on your water management, your carbon emissions, et cetera. And then you need to show the same sample of data in June 2022. And the regulator doesn't care if it goes up or down. They just want to know that you're measuring your data, so you're not making false claims to the investor community. And I think in Europe, and particularly, this will only increase. The US, I think it's a little bit more tricky because of the bipartisan tensions that are going on right now. And this would be considered to be, again, another sort of a nanny state move. So I don't know if Biden is going to be able to push through like ESG disclosure requirements at a securitization level in the same way that they have done in Europe, but there is noise around that.
Okay. I think Christian was asking also about who actually is the main lobby partner of companies such as Proof of Impact.
Yeah, so it's not really lobbying partners. As I said, like you either fundamentally believe as a management team that this data is going to drive your performance, right? So you either have that in your DNA, and we have plenty of companies, their business model, their intent, their DNA is to do good and do well, right? And they know the two are intricately interwoven, and they won't be able to go to market with a sustainable coffee brand unless they can prove that they're truly genuinely sourcing from, sustainable farmers, et cetera. So that's one, right? And those are the most genuine clients. The ones that need the stick approach, right, are effectively being forced by their investors. So if you have, particularly again, a company that is in more of the sensitive industries like energy transition, as I said, consumer goods, travel and leisure, then increasingly investors, real estate, increasingly investors are asking, okay, great, you got a great IRR. Now show me your carbon footprint. Now tell me, what's your DEI policy? And it actually becomes a bit of an operational headache if you don't have a system like Proof of Impact set up in the background to each time manually respond to your 5 or 10 investors who are all asking the same question in a slightly different way. So you then have to be reactionary rather than just being proactive and say, hey guys, here's a dashboard. You choose which metrics you want to track. Off you go, and don't bother us for the next 5 years, right? So that's kind of how it works more from a channel/company dynamic perspective.
Okay. Thanks so much for sharing all these insights. I think we are ready now to go into the breakout rooms, introduce each other, like to network with each other, but also to speak about our learnings so that we can consolidate them, identify still open questions. We come up for a wrap up, and also Fleur will have the time to do a short wrap up with the key takeaways from today's session. I think in that way we are all then sorted. It was a lot of wonderful, mind-opening content, and I guess we need just some time to digest it.
Perfect.
So I open up the breakout rooms. Everyone just join yours. They will close in 8 minutes. And so you're back in the main room then. Hey everyone, I hope you had a good time in your breakout sessions. I want to give the microphone back to Fleur to do a wrap up of what she thinks we should take away from the session.
Sure. So I think there's really three things, right? One is that there is a move in the investment world, in the consumer world, towards contributing, right? So not just spending for the sake of a financial transaction or investing for the sake of financial return, but asking, what is my money solving for? How am I, driving a positive change in this world? And I think that's one thing that we need to bear in mind. The second thing is that if we're going to look at the how, then blockchain provides an incredible foundation, platform, tool, mechanism to convert the how into value, right? So those companies, those investment funds that are delivering exceptional positive contributions should be worth more. And we need a conversion mechanism to convert this, what's called qualitative information, into real monetary value, right? That's the second thing. The third thing is that this isn't going to happen overnight. I know there are a lot of you guys probably and people who just like to rip off the Band-Aid, like go 100% digital, screw the existing environment. I mean, in terms of investment environment, financial markets have been known to be incredibly resilient against change, right? So if you look, it took about 100 years to embed the financial accounting principles. I'm not saying it's going to take as long this time, but we just have to be patient and we need to go step by step. So even though, yes, I fully agree with a decentralized approach to vetting what is investable, consumable, and it should be as objective as possible, we're going to have to go in stages. And I think each of you need to think about, like, what role can I play in those stages?
Wow, yes, this is a lot of food for us, for our minds now to reflect and revisit. We have tomorrow. No, yeah, tomorrow we have crypto coaching session where we can actually pick one of the SDGs and think about if we were to be responsible for bringing change about that, how are we going to do that? And I hope today's session gave a lot of good input and helps us steer our actions and our thoughts. On Thursday, we will speak about a case study for impact staking, which is a layer one solution for doing well while doing good, combining financial markets with security provision as in securing the blockchain, not just in financial instruments. So hopefully you come again on Thursday and see you all soon. Thank you so much, Fleur, for being
Thanks
with
very
us.
much, everyone.
Bye.
Bye.